We've seen loads of volatility in the price of oil over the last couple of weeks or so. You can see it here on the chart, some of the daily swings from 57, then up through 60, back down below 58, then back up again. Lots of volatility, but no real direction. So what does this mean for the price of oil? Should we expect it to be falling and breaking down towards $50 a barrel? Or actually, is the latest burst of volatility just a pause before the price moves higher again? I think it's been a really interesting market over the last 12 months, 11 months, the price of oil. Clearly we saw it crashing down in April as the coronavirus gripped the world. Famously, the May contract for oil went negative back then due to lack of demand and storage issues. And we've seen this incredible bounce back. This is West Texas crude, WTI, the US flavor of oil. We've seen the cash price go from briefly below $12 in April last year up towards 68 in March. And we've come off about $9, $10 since those highs. But I'd argue that the trend is still up. So although we're seeing volatility, this actually could well be an opportunity. And I'll talk more about what's been causing it in a second. Then we'll come back and look at things in a lot more detail. I think if you've been watching it during the day, you've seen plenty of swings in both directions for oil. But from a medium-term trading point of view, it's perhaps been a bit more difficult. So what I'm going to do when we come back and look at this is take a step back. Let's put these swings over recent days in perspective for oil and calmly try and figure out what the next potential trade could be. Hello, I'm David Jones from Capital.com, and I thought we'd do an update on the price of oil. It's been getting, I think, a fair bit of headlines because of the volatility, but there's no real direction. We're seeing it swinging around a lot during the day, but no overall trend over a few days. But I think this can actually still provide some clues as to where it's headed next. So as usual, in this video, I'll talk about what's been going on with the oil price, why we're seeing volatility over the last week or so. What does this mean? Levels to watch, then we'll jump onto the platform and see if we can set our trade up. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And of course, every Friday we now do these live streams direct from our YouTube channel. If you're subscribed with the alarm bell pushed, you get a notification off YouTube whenever we're about to go live and look at a whole host of markets in real time. Anyway, let's catch up with things. Let's see what's been going on with oil, talk about what's been driving it, then we can jump onto the platform. So just to recap, we had seen a really strong start to the year for the price of oil. We saw a strong finish last year, but by the March high, the price of oil was up 40% year to date, which is a massive move. For a major commodity like oil. It's a massive move for any market, but for oil, it's a big move, and lots of hopes have been pinned on economies returning back to normal as we saw various coronavirus vaccine rollouts around the world. The hope was that demand would continue to strengthen for oil as a fuel and keep that price well supported. Like I said, we've seen lots of volatility in recent weeks, some big swings day to day. We've seen the price range from about $57 a barrel on the downside, $62 on the upside, banging around within this range, but no overall direction. So it's been quite exciting to watch it intraday. But if we look back over a week, no real change in the price. But as I said, this can give us clues anyway. More of that in a second. The very recent fall we saw in the price of oil, the big one-day sell-off, was attributed to OPEC Plus, the oil-producing cartel, saying that it was looking to increase production of oil in the months ahead. OPEC, over the last 12 months or so, have been controlling production of oil to try and support the price, to try and keep supply down because demand has dropped because of the coronavirus. As things have returned or are returning to more normal, they're looking at obviously increasing production. So some of the numbers, an additional 350,000 barrels a day in May, the same again in June, and then getting ramped up to 450,000 barrels a day in July. So I think this did perhaps unsettle markets. There's this threat of more oil being produced daily. What would that mean to the price? Plus, of course, in recent weeks, we've seen other areas of the world. If you look at continental Europe, lots of countries in Europe implementing further restrictions, a lockdown, a concern about a third wave of the coronavirus and the impact that has on oil demand. This coupled with this coming increase in production, has spooked traders and investors. But although the price has been knocked, and this is where I think the opportunity might be, we've seen it sell off on that OPEC news. It hasn't really been knocked back that far. We're still holding above pretty strong support for the price of oil. So actually, is this an opportunity? Is there still plenty of buyers out there in the market on weakness, and perhaps we should join them? Let's take a look at the numbers, the big levels to watch, then we'll jump on the platform, look at things in more detail and get a trade on. I think the most immediate resistance is the top of that recent range. So it's from the end of March and it's coming in around $62.20, that sort of area. Whenever we've seen oil poke up towards 62, we're seeing the sellers come back out again. On the downside, a recent level from the range again, ahead of $57. Also, 9th of February low, $57.20. So lots of support for oil ahead of 57. I'm wondering if this is the level we use for our trade. Let's jump back onto the platform and look at things in more detail and set that trade up. I thought we'd start things off with the Bollinger Bands. We have seen them, I suppose, go wider during March as we've seen volatility pick up. We've not seen, I don't think, a massive jump in the Bollinger Bands, but don't forget these are used to try and contain 95% of the price action. At the moment, those lower Bollingers are coming in around the 57 mark. And I think what is interesting is the lows of the recent range. The March the 23rd low is the most recent low. That comes in at $57.20, which also ties up with these lows back in early February. So for now, at least, $57 looks like an important level for the price of oil, but more of that in a second. If we take a look at the trend since those April lows, okay, we've only got a couple of touches on this trend line, so I don't think it's that particularly a valid trend line just yet, but undeniably, we have a succession of higher highs, higher lows. The major trend, I think at least, is still up for the price of oil. If we bring in the RSI, Relative Strength Index, a gauge of overbought, oversold on oil, we've got to go back to November last year when the price briefly dipped below $34 a barrel, right to the beginning of November. That's when we had the last oversold signal for oil. And not surprisingly, because the trend had been so strong since then, plenty of overbought signals on the way up as the price of oil pushed ever higher, pretty much doubling off that November low. We came close in March the 23rd, again when it got knocked back to that 57.20 level. We came close to going oversold, but not quite going below the 30% level for oil. But again, suggesting, down at those levels, the price had moved to an extreme. As usual for me, perhaps what's of more importance is the price action. What has the price actually been doing? We've had this news from OPEC about them increasing production, getting production back towards perhaps more normal levels. If we flip this over to an hourly chart, we'll see the impact that had yesterday. So we did see the price under a lot of pressure, April the 5th in the afternoon, going from $60.50 and getting knocked back towards $57.60. So we saw, a $3 move in the price of oil, a 5% slide in the oil price. It's bounced back really strongly since then. And if we take this chart out, this is an hourly chart we're looking at now. We can see again the sort of volatility we've had since the third week of March, but we can also see what a good job 57 has done in holding the price up. So the trade that I'm planning on doing, I'm taking the view, well, look, that trend is still up for the price of oil. Going back to those April lows last year, going back to the November low, the move briefly below 34. We've seen the price come off from the recent highs, but for me, I still want to be a buyer. So as usual, the question is, well, where does my stop go? I think the most obvious place for a stop, it's this $57 a barrel level. We can see it was the lows in early February when the market traded down to 57.17. And again, February the 12th down to sort of 57.30. More recently, we've seen it down at 57.20. So I think 57 is, so far at least, proving to be something of a line in the sand for the price of oil. So the trade I would like to do is to be a buyer. with stop losses somewhere the other side of 57. The price at the moment is trading just below $59.70. So for me, I think to keep it simple, perhaps because given the volatility, we can see levels break and perhaps we get a spurt lower, kicking out some stops. I'm going to go 55.50 for a stop on the price of oil. I think if we see it get knocked back to there, perhaps the risk is we go back and test the trend line, move back into this range around 52. So 55.50, I think, keeps me out of trouble in terms of day-to-day volatility. I quite like the trade here because it spiked down to this low yesterday. We're seeing something of a recovery today. So with the stop loss about $4 away from where the price is trading now, if we do push up and break out of this range to the upside, I could start moving my stop up. So let's set it up. Let's buy all. So I'm going to buy 82 barrels where the price is trading now. The price is 59.70 or thereabouts. I'm going to put a stop loss on the trade. My stop is going in at $55.50. So the other side of the recent range, as I said, and it's for our usual risk of £250. That's the risk we place on these trades. Let's send that through. So that's it. The trade is placed, buying 82 at 59.73. And I think that's a fair enough trade. For me, that trend is still up. An aggressive trade would be just to have a stop just the other side of 57 because it has provided good support. Because we only look at oil every couple of weeks or so, I thought, let's give it a little bit more room and see if we can't catch a swing up, and a swing that I hope is going to go on to target $68 a barrel again, and I'll be trailing my stop up behind it if that happens. I think if we see 57 broken properly, the risk is for a run back to this old trend line, back towards this congestion zone in the low 50s. But for now, because 57 has been doing such a good job, I'm quite happy to be a buyer. Stops the other side of that. Let's see if oil can get some momentum back and have a look at those March highs once again. That's it for the update in oil. So lots of noise over the last week or so, no real direction, but does it mean we're just pausing before the price moves higher? We'll come back and see, but for now, we'll leave things there. So from me, David Jones and Capital.com, good luck with your trading. For more trading videos just like this, please subscribe to our channel.